This insanity in NVIDIA, as we talked about on Tuesday, is all about the huge buys of out of the money calls that drive this thing higher. This is what drives the markets sometimes. So when you look at, the S&Ps and you're like, what's holding the thing up? Why are the markets not, falling through the roof? Well, it's because of stocks like Nvidia and Apple. So you ask the question: should I buy Nvidia then? Is Nvidia that great of a company? Well, that's up for you to decide. It's definitely overvalued, as most of these big stocks are. We know that. Overinflated, overvalued, totally topping out here, but yet it still goes higher. Even though they got bad news about China isn't going to buy their chips and blah, 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 and Jensen's dumping the stock. Why is this going higher? Well, what I pointed out on Tuesday, when price was sitting at 181, and then this was end of day on Monday, and then Tuesday morning, we start to see this surge throughout the morning and throughout the day. Way past, I think it was at 186 when we got into the live session on Tuesday morning. And I asked the question, if price closed yesterday at 181, there hasn't been any news about NVIDIA, what in the world would cause NVIDIA to pop over 5 points in the morning? Why would it go from 180? What could possibly cause it to go from 181 to 186? And now you're seeing it going even higher, 187, 188. What is going on? No, no, no. They don't. Well, buying the dip is something completely different, sell the rip. What's happening is they're buying the out of the money call, which on Monday was 185. And we looked at the options chain and we saw hundreds of thousands of calls at 185, at 187 half, at 190. They're like crazy amounts of call buying. And so when you get these huge blocks of out of the money calls that get purchased for Friday expiration, the market maker has no choice but to buy blocks of stock, big purchases of stock. That moves the markets. Buying options doesn't move the stock. It has no effect on the stock because it's an option to potentially take possession of stock. But it is not per se a stock mover. What moves the stock, and I've talked about this before, but it's worth mentioning as many times as possible. What actually moves price up or down? It's the market maker. When the market maker buys blocks of stock, that intense amount of stock buying pushes the price higher, which brings in the FOMO traders, the chasers, who end up buying more stock as well. They get enthusiastic and they buy stock. But it begins with the market maker buying tons of stock. Why is the market maker buying stock? Because if price is at 181 and the option buyers over here start buying the 185s, what happens if price moves up for whatever reason and this 185 call holder of this option says to their broker, I want to exercise my option. I want my 100 shares. Oh, by the way, I have 10,000 contracts. Please give me my 1 million shares at 189, please. I've got the 185 calls, but I am exercising my right. I want my 1 million shares at this wonderful price of 185, because that is what an option is, right? Is it not, in fact, an option to take possession of the stock at a set price that you determine when you buy the option? That is what an option is. Go back to Options 101 in the basic options course, right? You pick the underlying stock, you pick the strike price, ding, 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 ding. You pick the expiration date, and you've got until expiration to either flip it, close it, let it expire worthless, or you can exercise it. And you can roll it and do other things too. That's what it gives you, all these options to do all of these things. And one of these things is to exercise and take possession of the stock. But here is why the market maker buys blocks of stock and what really moves the markets. If price moved up on analysis, some analyst said Nvidia is going to, go to 8 trillion this year or whatever it is, right? Nvidia gets a big buy from Yugoslavia, whatever it is. And for whatever reason, the stock price shoots up to 189 and the market maker has to deliver shares. Do you think the market maker is going to buy 1 million shares at $189 and then deliver them to this guy at 185 and lose 4 million shekels? I don't think so. So what does the market maker do? The market maker starts buying it at 181 and 182 and every number in between and 183, and will continue to buy blocks of it as it moves higher, as long as the feedback the market maker is receiving is that there is an abundance of calls being bought over and above the amount of puts that are being bought. The market maker will buy. They have to buy, because if they don't buy it now, they're going to have to buy it later. If they buy it later, they'll pay more for it. Does everybody understand? So who delivers the shares? The market maker. The market maker has to go out and accumulate the shares from people that are selling it. But if they wait until this, then they end up buying it at too high a price. They'll be delivering it at a loss, and the market maker never loses because they're the casino. So this is what moves the market. Now, once the calls start to fade and you start to see puts show up. Yeah, we always watch the put call ratio, right? It's one of the charts that I have in my internals. It's part of the market weather. We talk about it, we watch it, we always look at it. Absolutely. But once the market maker starts to get feedback that puts are starting to show up in larger quantities than calls, they start dumping the shares. Why? They don't need them anymore because these guys realize that price is starting to come down and they start closing out their calls. So the market maker has to raise some cash to pay them the money for the calls that are maybe still in the money. They start raising cash, a ton of it, because they're going to have to hedge because they may have to buy back for the puts. So now they switch gears and they dump. And it is this market action throughout the day when you talk about zero DTE, meaning the SPY or IWM or QQQ, the trades, and obviously SPX, CTV. This market action throughout the day, 0 days to expiration, the market maker is shoving price up to meet the demand of calls, selling off to hurt those call holders, get the puts excited, not so fast, and then they do this. Now the puts go, oh shit, and they start closing. All of a sudden, call buyers come in, yeah, boom, 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 boom. All of a sudden, the call holders, they start crying, bring the price down. And so the market maker is buying, selling. Have you ever noticed at the end of the day, it just goes whoop? Why? Because there's a whole truckload of puts right here. Have you ever seen the market do this? Whoop, at the end of the day, because there's a whole truckload of calls here. Equal opportunity dream killer. If you're a call holder or a put holder, at the end of the day, the market maker will punish you one way or the other. This is what moves the markets, the market maker responding. This is the premise for Convert the Vert. We take advantage of these swings because I have identified the time of day zones that the market maker does his dirty work. I know when these are. I have an indicator and a workspace that shows you exactly where they are, along with a methodology and rules and tools and indicators to confirm. We buy the shift. We have an amazing strategy called CTV. That's the premise of it, buying the shift with a walkaway trade on SPX. But that's another game. NVIDIA, same thing. Same thing with NVIDIA or Apple or any one of these high-flying stocks. So when you look at a chart like NVIDIA and you go, what the heck is going on with NVIDIA? All you need look is at the options chain. If you're at around 180 bucks, look at the options chain for the upcoming Friday and see if there's just out of the money at every strike, tons of calls. In the case of NVIDIA, it's 100,000 plus at every single strike, about 4 or 5 strikes out of the money. That's what pushed this up. It's not the economy. It's not tweets. It's not Powell, Yellen, Biden, Trump, Bassett, anybody. It's the market makers capitulating. That's what's moving this.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.